LME is suspending trading in its nickel contract after the price doubled amid a short squeeze.
Prince Abdulaziz was very adamant to me on the phone that he felt like there might be some market manipulation going on because of the spread between the paper market, that is the contracts we show our viewers on TV, the price of oil as we relate it every day, and the actual price of physically delivered oil.
3 J.P. Morgan metals traders have been charged with alleged market manipulation. Wilfred, you've been digging into this story all day.
Yeah, so 2 current and 1 former J.P. Morgan precious metals traders have each been charged with alleged spoofing, market manipulation and fraud between 2008 and 2016.
Our industry is at a turning point, one that Abaxx has been anticipating building towards for years. And we're looking forward to serving market participants with smarter tools to manage risk at a time when risk has never seemed so abundant. So on the systems front, as discussed in our previous 2 calls, we made the decision earlier this year to upgrade our overall trading and clearing systems, adding additional capabilities to our exchange and clearinghouse stack so that we could provide a more dynamic and agile risk system, as well as more modern cloud-based architecture that positions us to lead innovations in real-time physical collateral delivery and smart contract to settlement.
The first dimension is building and launching a new commodity futures exchange in Singapore, which is going to focus, at least initially, on liquefied natural gas, which potentially could become a global benchmark contract because there isn't one yet. Joe Rea, you have been involved in the futures markets for more years than most people want to admit to being alive. It seems to me, as a futures trader, boy, there has been a trend in the industry of consolidation where CME Group and ICE bought up all of the independent commodity exchanges. Why now? Why Singapore? And why a new commodity exchange when it seems like you're kind of fighting a headwind of, as some would say, consolidation, I would say monopolization of this industry by 2 big players that are pretty formidable opponents?
That's correct, Eric. And again, thanks for having us. Really the genesis of the idea around Abaxx and the Abaxx Exchange centered around the interest from the marketplace in looking at new ideas in physical commodities. The incumbent exchanges generally are more focused on financially settled products, which is nothing wrong with that. There's a lot more ability to bring those contracts to market faster. However, the genesis of any financially settled contract is in the physical markets. The real importance of what we're doing that's a little bit different is that we are engaging with the commercial players in the marketplace. We are engaging with the firms that are trading the physical commodities and have exposure to risk in the physical commodity markets that allow us to, we see, bring this new exchange to marketplace. Granted, to your point, there are a lot of there is competition from the incumbents, but we think that particularly where we're domiciled in Singapore and how the Asian marketplace has grown, we know that origination of trades from Asia is growing in quite a quick pace, and particularly in gas markets. And we feel that there is an opportunity to bring a new exchange not only to the marketplace, but with a focus on Asia, at least from our regulatory perspective, that can bring the opportunity for participants to hedge their risk in this new marketplace. And how the marketplace in global gas has really evolved, right? From that term contract structure to arguably within the past 2 to 3 years to more of a short-term or spot market. So there really wasn't a need for hedging in the global gas market up to a couple of years ago because of the use of term contracts for most of the gas that was on the water. Any instrument that was used for any excess gas that was being traded were generally very inefficient means like Brent crude. You talk about Brent. Brent's an oil contract. Brent was used as a hedge. It still is in some contracts that are done between suppliers and receivers in LNG for hedging or pricing the actual molecule that lands up in Asia. And so, certainly an inefficient pricing mechanism. The market moved to Henry Hub to some extent. Again, a very inefficient marker to price against LNG. The market then went to a product called JCC, the Japanese crude cocktail. Again, very inefficient, still being used today. So my point is that there wasn't a real demand for or need for hedging with a benchmark for LNG, and B, any products that were being hedged were used on very, very inefficient means. And so the marketplace and the opportunity for us is looking for opportunities to list contracts that could bring more direct correlation and convergence to the physical marketplace with the use of a physical futures contract.
Singapore wants to be the world leader in the most dynamic part of the world. We just had a trade agreement amongst all the Asian countries. And, if you want to get long Asia, that's where we're going to have growth no matter what happens. Greater Asia would go from China, Japan, Korea, down through Vietnam, Cambodia, Laos, Thailand, Singapore, down to Indonesia and Australia. This is the the most vibrant part of the world economy. So metals used to be traded in the London Metals Exchange or in the COMEX in Chicago or in New York. But a lot of the veterans in blockchain and metals trading from NYMEX formed Abaxx as a private startup to revolutionize electronic commodity markets. And they found a fertile home here in Singapore. Singapore has a very large group of sovereign wealth funds. There's Temasek and GIC. Between them, they run several $100 billion. And Singapore wants to be host to disruptive, non-polluting industry.
Turning to our product updates, we disclosed that we'll be submitting additional physical delivery commodity products to the MES this quarter. We continue to advance our LNG delivery contracts within the rapidly evolving global gas market, taking lessons from and reacting to the dynamic commercial realities of LNG and the energy crisis in Europe and Asia. While aspects of this extended launch timing have tested the patience of some, I want to emphasize that we are now in a position to launch a far more comprehensive market structure as the LNG market has transitioned from long-term contracts to spot markets over the past few years, and now today's crisis and buyer and seller of last resort volatility. Our critical focus on this shifting market structure at this juncture should serve the community well, positioning Abaxx as a truly unique and, I believe, essential global market over the coming years. Turning to carbon, we had a very strong June and July in particular, engaging with the global trading community on a proposed market structure for voluntary carbon markets. While we've seen a number of global exchanges announce new voluntary market products this year, nearly all of them major exchanges, in fact, we're confident the Abaxx approach to serving these industry traders with financial tools and contracts in line with their existing commercial practices is surprisingly unique engagement approach and represents a competitive advantage we built with this team, having depth of both commodity industry and physical exchange experience. We also announced for the first time that we've formally engaged our first battery metal contracts with the global metals and mining industry. At this point, you can assume that we're in pretty regular discussion with the largest energy and metals and mining companies globally. So looking at I'm getting a lot of questions about investment partnerships. Again, naming some specific names. So again, we don't want to get into specific names right now, but very much like I mentioned on the on the diversity of participants, you'd also want to see diversity of potential stakeholders in the exchange and clearinghouse as well. So that would be upstream and that'd be sort of upstream producers and downstream consumers of commodities, financial institutions, perhaps some regionally, sovereign wealth funds or, focused on I guess more national priority, for developing markets. So it's a little bit, all of the above, currently.
Abaxx is the type of startup that has some real industry veterans, and they're going to start in a series of verticals. So liquefied natural gas is a transition fuel as you get away from crude oil. It's one of the world's biggest fungible markets. They can make that market and drive down the cost of LNG and make it transparent. Then they could go to gold and silver and copper and nickel and make very transparent markets for different grades of gold, silver, copper, and nickel based on how much global warming gas is associated with it. So mining is itself sort of the last great 17th century paradigm industry that is going to be profoundly disrupted. But the cloud and blockchain present an incredible opportunity to track every commodity right back to its source. I'll give you an example. Leonardo DiCaprio was in a film called Blood Diamonds. And, some diamonds were produced by forced child labor, say in the Democratic Republic of the Congo. Other diamonds are produced, mechanically without any human labor at all. And other diamonds now are made synthetically without any mining at all. They're made in a laboratory. So De Beers found out how to put a little microscopic trademark on the girdle of a diamond. You can't see it with the naked eye, but proving that it wasn't a blood diamond. With blockchain, you could trace every individual diamond back to its source with a certificate that comes with the diamond. So you make sure you're not buying a blood diamond. So we're going to see the whole supply chain of metals revolutionized. If you mine copper in Chile, and this has been independently audited, and you burn coal in the grid and you grind enormous volumes of rock, of low-grade copper ore, if your production of global warming gas is X per ton of copper, and you compare that to going to the Congo, where you have hydroelectricity to produce the copper in very high grades, the copper mine we're building now has about 1/17 of the global warming gas per unit of copper produced compared to a large low-tonnage copper mine in Chile. So as people realize, not all copper is the same. It may all trade at the same price right now. Today, the price of copper is, say, $7,100 a ton. In the future, you're going to have 40 grades of copper trading based on how much global warming gas it produces. Even now, iron ore comes at different grades, and you're familiar that crude oil comes in different grades. You hear about WTI in crude oil. You hear about Brent. And you're talking about light sweet crude or heavy sour crude. And we got used to the idea that different crudes had different prices around a reference price. And so every field of crude oil would sell its crude oil in reference to WTI or Brent. Well, that's going to happen to metals. And these metals are going to need to be tied back through NGOs and blockchain in how consciously they're produced. Independent people will audit all the ESG aspects, and mining companies will have to do an annual audit, an independent audit of everything they do, so that institutional investors that are interested in these issues not only look at the financials of a company, but can rationally quantify all of the environmental, social, and governance aspects.
Everything we've discussed so far is basically new commodity futures exchange domiciled in Singapore, trading liquefied natural gas, doing some exciting things with carbon credit trading. That's how you're going to make money with this business initially. But longer term, you've got some really exciting strategic plans to not just have another commodities exchange like the other commodities exchanges, but eventually to kind of re-architect the way commodity futures trading actually works around tokenization, what some people call blockchain technology, the idea of digital bearer instruments that provide a whole new way of doing business in finance. The second dimension of Abaxx is re-architecting the way commodity futures trading works to embrace decentralized finance. In the old system, which a lot of our listeners are familiar with, if I go on the COMEX and I buy a gold futures contract and then I stand for physical delivery, they don't, send me a FedEx with gold bars. What they send me is a physical warehouse receipt, a piece of paper which is literally good for gold. I can exchange that by going to the COMEX warehouse in New York City and I can get my 100 ounces of gold. There's lots of problems with that system. First of all, that paper certificate, you could lose it, in which case you'd be screwed. It could be forged. It could be double pledged or rehypothecated in all kinds of shady lending schemes. There's all kinds of problems with that old system. So at the first step of what you're building right now in this new commodity exchange or this new commodity futures exchange, you're creating a system where instead of getting a paper warehouse receipt, instead, what you get is a digital token. a secure digital bearer instrument that's built on top of the Ethereum smart contract system, which is basically a digital warehouse certificate. And that eliminates the double pledging risk. It eliminates the fraud and forgery risk. At the same time, it creates a fungible digital instrument which could be literally moved all over the world and traded all over the world. We can create the equivalent of bearer bonds, financial instruments that whoever has possession of it owns it, period. No question, that's it. We have the technology to eliminate custodianship risk, counterparty risk in derivatives. We can design a new derivative system that works completely different than the one today. We can design, I contend, we can redesign the entire 500-year-old or 700-year-old, I've lost track of how old the fractional reserve banking system is, but we could redesign credit itself to work differently than it works today.
Then I looked at blockchain for the first time, and to me, it was the solution to a problem of this recording of this commodity trade life cycle transparently, right? It could be shared. It could be used as the neat thing about the chain is that it's immutable and irrefutable. It cannot be amended, right? If you build on a block, you're doing exactly that. It's like Legos. That original block still exists. It can't be erased. It can't go away. So a deal recorded on a blockchain is an electronified contract. It was the logic around securitizing all of the relevant information at a single point in time and held by a single point and entity. It would have to be initially commodity by commodity, but you could still take all of the relevant pieces of a commodity, whether it was source, time, location, price, beneficial owner, date, vintage, weight, all the specifications, purity. Those live in a lot of different places today. Even today, you can put that into a single point in time. And that was really where we began that. So we began it with gold. Gold was an easy point to sort of it's the training wheels for us to get blockchain and distributed ledger recording and the first smart contracts. And now we've gone considerably beyond that. Personally, I'm working in carbon, which is a digital asset to begin with, or an intangible asset from a regulatory framework. So that's a system that's got good registries and has frameworks around it, but it's not operated at any central point in time. It's independent, if you want to call it a warehouse. There are independent warehouses that hold these carbon credits, and it's pretty much an OTC market. Trying to bring that into an environmental compliance on a scale or a scalable vision, the blockchain and distributed ledger architectures and smart contract recordings is really going to be revolutionary in this particular instance. But it's applicable across the entire commodity life cycle and into what they're talking like green finance, into the green bond markets. And
I love the vision. And yeah, I got involved as an angel investor because we'd like to have our copper certified as the greenest copper. And we'd like it to find a market-driven, appropriate premium for how clean and green our copper really is. And so, we have to make our own future, and that's what Abaxx is part of. I think the depth of the management and the vision of the people is remarkable. I mean, these are real veterans out of the NYMEX, the COMEX, these kind of current incumbents in these electronic markets. All the mining companies I know are going to look to this. We're going to want to prove that we can create low carbon nickel or iron or platinum or palladium and see it get traded here. So Lucas Lundin, who's from Sweden, he's a very good friend of mine. He also invested. The Lundin family are famous for the work they've done in mining and heretofore in oil and gas. They discovered oil and gas in Norway. But, they're thinking the same way I am. So there's a lot of really interesting people that backed Abaxx from the beginning. It's going to be fun.
Third dimension. So, Josh, let's move on to ID++. And
the internet identity piece, because I really believe that decentralized data stores, i.e. the, decentralized computing of the blockchain, combined with a very strong identity internet, will create a strong data internet and really revolutionize the world, very much like, cloud computing plus mobile, or maybe the, the GUI and PC revolution before that. And so we're building up from that sort of commoditization of personal computing into the next sort of decade and a half of the commoditization of these networks through mobile and cloud. And where I see the world heading over the next 5-10 years is another sort of game changer, and that's the having a strong identity internet, like truly decentralized, not identity custodians like Google, like Microsoft, all of the different ways that you can log into a certain thing using credentials from one of these big cloud providers, but truly having decentralized identity really opens up entirely new business models. And I would even, putting on my technologies hat, I actually think it really completely changes the way we do business overall.
Just to bring this into concrete terms for our listeners, Josh, I want to talk about the DocuSign service, which is extremely, extremely popular in finance. And what DocuSign does for you is it gives you the online equivalent of a signature. In other words, I can go and forge your signature. I can say on DocuSign, I'm Josh Crum, and sign and so forth. They've organized things so that I will probably be committing a crime if I do that, but I could still get away with it. If what you're saying, and I know that you are saying this, Josh, but I just want to put it in context, is if Abaxx can deliver something like DocuSign that's not a signature, but it's more like a notarized signature, where an independent third-party authority is attesting to the identity of the person signing and saying, this really is Josh Crum. It can't be forged. You can't just go sign somebody else's name, because you have to be logged in and have authenticated with some kind of two-factor authentication as truly being Josh Crum before you can gain access to sign something. That by itself makes DocuSign obsolete overnight and puts you guys in the position of having a business line just right there that might be bigger than the whole futures exchange business. I mean, this is a really big aspect of this. Well, and I think the opportunity is incredibly ripe for you to establish yourselves as the de facto finance industry identity token of choice. If you look at the way people deal with this problem today in finance, we're really pretty darn stone-aged. People literally say, well, the way you prove that you're a finance professional is send me a note on Bloomberg, because we assume since Bloomberg is so overpriced that nobody who's not actually in the industry would ever have one. And therefore, we're going to use that as a validation tool to see if you're a professional or not. That's pretty darned inefficient and crazy. If you can introduce a notarized form of DocuSign that becomes the standard for all contracts in finance, and everybody can execute online documents very quickly and they have the same effect as a notarized contract, that is a breakthrough. That is tremendous by itself. You've got a very, very exciting business here, one which Kyle Bass said just the futures exchange in Singapore and the natural gas, nothing else. That by itself has him incredibly excited about investing with you. So that business by itself clearly warrants at least a NASDAQ listing, if not a New York Stock Exchange listing. ID++ by itself could easily completely, obsolete DocuSign overnight. And that's a business by itself that probably justifies at least a NASDAQ listing. And meanwhile, you've got plans to completely re-architect around decentralized finance, which anybody who can really see where the future is headed knows that's it. That by itself is a business that easily justifies at least a NASDAQ, if not a big board listing.
Hello, everyone. As we close out the video here, I want to point you towards the analysis of James DeWade. And I'll link his fantastic article from Seeking Alpha in the description and his Twitter as well. Have a look at the detailed DCF forecasts he's made based off the possible LNG, carbon, and gold contracts that Abaxx could develop here in the near future. And this isn't even taking into account any other possible contracts, of which there will likely be many. The assumption for the stock's price as a price target in 2024 is around $17, and currently the stock's trading around $2. Overall, I believe Abaxx has the ability to develop a strong moat through network effects on their contracts, disruption through their innovative technologies in the financial space. And all this upside is purely based off the commodities exchange. This isn't even mentioning any of the other verticals or assets in the business, like ID++ and other decentralized technologies. One last thing to note, the timeline Josh Crum gave for more news was around 4 to 6 weeks out. And he said this about a month ago on Abaxx's previous investor call. So this means we should be expecting to hear more news from the company in the next several weeks. But yeah, let me know what you thought of the video in the comments below. And please like and subscribe if you're enjoying the content. Thanks for watching.